Hi, Tom Lydon with ETF Trends here in Washington, D.C. at the Charles Schwab Institutional Conference. Here with Jeremy Held, Director of Research at ALPS. Great seeing you, Jeremy.
Yeah, thanks for having me, Tom.
So there's a lot going on as we wrap up 2018. What are some of the biggest things that you're seeing in the marketplace that advisors need to remember?
Well, you know, after what has been a really long environment that's been very good for both stocks and bonds, 2018 has sort of stopped that trend. In fact, 2018 is the worst year for a 60-40 portfolio since 2011, so far through the first 10 months of the year. And a few things that are actually performing quite well in that environment are real assets, things like commodities, MLPs, even real estate. Yeah. And particularly MLPs have done relatively well from the standpoint that they hold up well in inflationary environments, and they've also been very resilient when it comes to rising rates.
It's been tough for advisors because we've had a bull market in stocks and a bull market in bonds, and to move away from that, the allocation to non-correlated assets is kind of bucking the trend. But now you kind of comes home to roost, right?
Now you're starting to see it, especially in 2018, because there haven't been a lot of places to hide. The S&P has done pretty well, bonds have been relatively flat, but a lot of other markets, especially overseas markets, have done very poorly. And that's where investors are starting to say, wait a minute, we know what the last 5 years look like, but as we look forward, what do the next 5 years look like? Yeah. Is inflation going to pick up? They see what's happening from an energy infrastructure standpoint, where the US is now the largest producer of crude oil on a daily basis. How can I participate in that trend? And pipelines are starting to look a lot more attractive.
Absolutely, and oil, again, consistently above 70 bucks a barrel. Like you say, we're the #1 producer in the world, which is amazing. And really the whole MLP pipeline operation system and the way to be able to profit from it, and most importantly, the yield that comes from that. So talk about your ETF and the yield around it.
Yep, so our ETF is, the ticker symbol is AMLP. It's the largest, most liquid MLP ETF in the marketplace today. And essentially, it is investing in companies that transport natural gas and crude oil from point A to point B. Historically, that business has delivered yields in the 6 to 7 to 8% range on a very consistent basis for more than 2 decades.
Yeah. So when we're looking at a rising rate environment and people are challenged with going on long duration, a small allocation to MLPs can really boost that relatively low yield to something that is worth talking about.
Especially in a rising rate environment, Tom. That's a great point, because MLPs, relative especially to other equity income asset classes like REITs or utilities, have been a lot more resilient when it comes to rising rates, because A, they have a pretty high yield, but B, they're also to grow that distribution over time. So if you look at periods like 2013, the taper tantrum, or 2016 when rates rose, or even this year when rates are rising, MLPs have been quite resilient, particularly with respect to other equity income-oriented asset classes like REITs and utilities.
The MLP marketplace isn't going away, it's just going to get bigger. And again, with these attractive yields in this rising rate environment, something to think about.
Yep, absolutely.
Great seeing you, Jeremy, thanks.
Yep, thanks a lot, Tom.